Hello everyone, long time no see. How's everyone doing? Last week I had a not 90, not 92, a 96% success rate last week. I went 25 for 26. I lost one trade and it was down 30%. That was the only loss. Every other trade, they win. And honestly, guys, the proof is in the pudding. You can join the link, press the link in the comments, in the channel description for the Discord. You can get access to it. I'm the best trader on this app. The best trader that makes YouTube videos, bar none. There's no one else that shares these trade signals that is consistently profitable the way that I am. And there's a reason why you're watching this video right now. So if you guys want access to the Discord, go ahead and click the link. It's something that is definitely not going to it's you're gonna thank yourself later. But proof is in the pudding, guys. I don't really have much else to really say. 96% success rate speaks for itself. I could walk around with a clown outfit. I could do whatever the hell I want. When you trade that well, you could do whatever the hell you want, say whatever you want. And even now, I'm way more humble than people that would be in the same situation. So definitely click the link. I want you guys to succeed. I want you guys to make money, especially during this time when Wave is under maintenance. I am giving this a lot of time and effort. I'm taking this very, very seriously. I want you guys to make money. That's been my goal for months and years. You guys have been watching me on YouTube for quite some time already. And legitimately, every single thing that I've said where I want to help you guys make money, to help you guys provide for your families, and then use all of that money so that we can provide for our communities and the people abroad that need it. That's what I'm going to be doing. So I'm going to be in this space for the next 40, 50 years. God willing, I'm alive. I'm thinking about this in the long term. And in the short term right now, I'm working on making everyone around me rich. Okay? So definitely join the Discord. If you want access, go ahead and click it. The proof is in the pudding. The 90s, I had a 92% success rate last week, 96% this week. It is what it is. Whether you like it or not, I'm here and I'm the best on this app. So go ahead and click the link. Love you guys. Let's get started with the rest of the video. First and foremost, let's go ahead and take a look at the big three. Okay, so this is the chart of the yields. So the yields are important to look at because it has an inverse relationship to the market. If the yields are doing well, then the market is going to be falling. So right now, we see the yields breaking out, yet the market was also green. So this discrepancy is showing currently in the market. Generally, it would have an inverse relationship, but right now, it did not have an inverse relationship. So the yields are definitely showing strength. It will likely need more strength for the relationship in the market to to inversely correlate. So we're going to need some more strength out of the yields. That's clear. Number two, the VIX. The VIX has a much better inverse correlation as well. So if the VIX is falling, then that is bullish for the market. And you can see that it made a new low. It broke the low from Friday, November 24th. And we haven't been at these levels since January of 2020. Okay. So what is interesting to understand is that it's possible to be within this zone and chop around for quite some time. Okay, so this is not an automatic reason to be bullish on the VIX or, bearish on the market. We could be here for time. That's why I entered into the longer term puts. We're still holding them because there can be a lot of chop in the short term. Swinging the market right now isn't that easy. And just the simplest thing you could do is basically have a longer term bias on whatever you want to do. So currently, that's what we're doing on the SPY. We have long-term puts expiring in January. So the VIX obviously broke lower. The lower level of the Bollinger Bands are starting to curl upwards, which shows that there is a stunt in terms of how further down we can go. So this basically like if we have another red day, then we're going to close outside of the Bollinger Bands while the Bollinger Bands are pointed upwards. So that would denote overextension to the downside on the VIX. If we are overextended to the downside on the VIX, that is bearish for the overall market. Because when something is overextended, right, very simply, don't even think about the correlation. If something is very overextended to the downside, it needs to get a bounce, right? So if the VIX ends up bouncing, what ends up happening? The market ends up falling. So this is something that is in the works for this week, most likely. And this week is going to be really, really interesting. So the VIX, it's getting close to, if the Bollinger Bands can continue rising upwards like this, it's getting close to a low and for a bounce. And once the VIX bounces, the overall market is going to fall. Okay, so there's that for the VIX. Last, let's go ahead and take a look at the dollar. So the dollar is similar to the yields in that we had a green day, but clearly, the dollar it is showing strength as well. It broke out of the rising falling wedge. It also has an inverse relationship to the market. So if the dollar is showing strength, the market should be falling. So clearly that didn't happen either. And my estimate is that we need to close above major levels to the upside on the dollar for this correlation to take effect. So if the dollar ends up breaking and closing above 104.27, 104.30, that's when the market will start showing some weakness, in my opinion. All right, so now this is where things get a bit interesting. Let's just go ahead and take a look at the large tech stock. Like we could just rapid fire through them. So Apple, it's technically getting a bit overextended to the upside in terms of the Bollinger Band. We just closed outside. This is not that overextended. We can easily continue rising, no problem. But we have to be cognizant of that fact that Apple is currently trading outside the upper bands. If we get another huge push to the upside on Apple, then the chances are that we get a pullback. Okay, so just keep that in mind on Apple. Let's go ahead and take a look at the rest. So Meta showed a push to the upside, broke above 326. It was a loser down here. Now it's catching up to the winners. We have resistance at 337.50. Okay, nice and simple. Tesla, a bit chop. It's just holding same, zone between 240 and 245. Great. 238 to 245. Okay. So we need a nice solid close above 247. And then we could continue up, and then we could break above 250 and then potentially see 253 again. Tesla is, it's still holding on. Okay. Amazon is also still holding on, not really doing too much, holding above support, still trading within that same range. Let's go ahead and take a look at Netflix. Netflix bounced off support. It has some room to go. So if we look at the fib levels, we can still see the 38.2% fib here on Netflix, but it's not an immediately good sign that it closed below the 23.6. So, in the short term, we should see 456, 457. But then if we get a nice close above 459, that would be interesting. So what we need to now see is if Netflix can help pull the market up. And if Netflix starts showing extreme strength to the upside, that'll help increase, that'll help pull the rest of the market up. So now this is an issue. Like, we need to see the losers start doing well, primarily because of chips. So Nvidia, not doing like terribly, right? It's still, breaking above the 38.2. It's retested on the dot, 50% fib, right? For Nvidia to be really, really bullish again, we need a break above 485, which is the 618% fib. Okay, but the most important thing to look at is AMD. So AMD is now very, very overextended to the upside in terms of the Bollinger Band. We got an open and a close outside of the upper bands. We could get a pullback. So if we get a substantial pullback on AMD, we need to be cognizant of the fact that we could also get a pullback on Nvidia. And that would, that would affect the AI chip related stocks. Now, we do have good news out of Google because of their new AI system. But if the chips start doing poorly, based off of AMD's overextension to the upside, if the chips start doing poorly, then Google has an opportunity to fill back down here and come back down to the support. And then when we look at Microsoft is not doing exceedingly well. This is basically within the 38.2, 50% fib rate. So if the chips and Google start pulling back, Microsoft is also going to pull back, most likely. And that's not really the safest. It's not really the safest opportunity. That, coupling with the fact that Apple is also outside of the upper bands, is not an amazing, it's not like the most bullish case. And that's why I was mentioning that we need to see if Microsoft can break above 376.50, and if Netflix can start showing some more strength as well, and if Meta can start breaking above these levels also. And not even to mention Tesla has been just doing nothing, as well as Amazon. So the main thing is, as the winners get a bit of a pullback. So if AMD, Nvidia, Google get a bit of a pullback, what do these lagging stocks essentially do that have been coiling up and just consolidating? What are they going to do? So heading into the end of the year, generally the first 2 weeks of the market ends up being choppy or bearish. Clearly, that's not really the case. On the SPY, we have made swing highs, right? But what's important is that into the end of the year, the last 2 weeks, and the beginning of January, usually it's bullish. So if we've already been bullish so far this month, a lot of answers are going to be answered this week, most likely. So, and just real quick, just looking at the NASDAQ, the upper bands of the NASDAQ are pointed down sharply. So what does that tell you? That algorithmically, the price to the upside is getting capped. So if it gets capped to the upside, if we get a strong move to the upside, then we're going to be overextended. And once again, what happens when you're overextended? We should get a pullback. Okay? So this is not great to look at for bulls, because it's just not good. Because if we have another move to the upside Monday, and then another one Tuesday, by that point, we're going to be trading outside the Bollinger Bands. So, it's going to be interesting. Okay? So I hope that makes sense. And then all the while, the lower Bollinger Bands are also pointed upwards. But it's difficult to start being long here so close to the Bollinger Bands being overextended. Like, they're about to be overextended. So I hope all of this stuff makes sense. So the NASDAQ, it's getting to a point where being long on the NASDAQ is just not as safe in the short term. Okay? So it's difficult. It's a difficult situation, because if a lot of it also just depends on the lagging stocks, Amazon, Amazon, Tesla, Microsoft, and Netflix. And and we're also going to have to see how AMD and Nvidia respond. But there's a lot of information that I just shared. I hope it makes sense what I'm looking at. So for example, the IWM, right? This is a chart of the IWM. The Bollinger Bands are pointed upwards. They're slanted upwards, while we have green. So being bullish, the IWM feels way more comfortable. Does that make sense? Because we're not going to be overextended to the upside. So if we have a green day on Monday and then another one on Tuesday, the Bollinger Bands are already moving upwards. So we're not going to be overextended. Does that make sense? It feels way more comfortable to be long the IWM than it does the NASDAQ. Does that make sense? Because one of them, the upward price, they're already calculating that the upward price will increase. For this one, it's calculating that the upward standard deviation should be lower, which caps the upside. The IWM's upside is not capped according to the Bollinger Bands currently. So I hope that makes sense. And then last but not least, the SPY has a similar situation to the NASDAQ. It's not as close, but we have resistance at 462. We obviously closed finally above 460. And once again, we're still holding on to the long-term puts. What I would like to see is if we get a really, really strong impulsive move to maybe even 463, 464, I'm going to re-enter short. And yeah, like basically my plan for quite some time has been to get long-term puts. If we get higher, then I'm going to get aggressive. I'm going to get more aggressive to the downside. And the reason for that, we could go over it again, is the overextension in terms of the MACD. So there has been a time back in August of 2022 where we touched this level on the slow MACD indicator, right? We were consolidating pretty similarly to what we are now. We were consolidating. And then we had a big push upwards. So this push upwards occurred from 415 to 430. That would basically be the equivalent of what's going on now, depending on how much more room we have to the upside. But had you gone short 2-month outputs here, worked out. And had you waited to also enter more aggressively to the short side with a shorter dated contract up here, it also would have worked. So that is what my plan is going to be. And essentially, that's my plan. If it doesn't work out, it is what it is. I'm not too concerned with swinging at the moment. There's only one swing that I have. If it doesn't work, it doesn't work. Because day to day, we're scalping we're scalping a lot. And we're scalping and we're making a lot of money doing scalps, day trades. Once my bread and butter is swing trading. But right now, with the market very consolidating and choppy and stuff, it's just not really that worth it. But yeah, we're gonna have to see how things play out. And so far, things are playing out really, really nicely in the realm of day trading. So yeah, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.